Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 45 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
I'm good, Bryce. Very excited for this episode.
You're excited for every episode.
Oh, mate, it's an exciting time to be in finance podcasts.
Absolutely. So we continue with our expert investor series. As always, what's hot, what's not. We kicked it off sort of late last year, and by popular demand, well, as we promised, really, we have got Matt Leibowitz from Stake back on to join us. Long-time friend of the show. Thanks for joining us, Matt.
No, cheers, guys, and Happy New Year.
Yeah, likewise. So the idea behind what's hot, what's not is to get a bit of a check-in on what's happening in the US. You've got some awesome data through Stake. You can let us know what is, I guess, attractive to buyers at the moment in Australia. What are we selling? You know, last time we came across a few interesting companies. I think there was a trucking company that we spoke about here. And Tesla was right up there, and lo and behold, it's right up there again. So we're going to go through who's buying what. We've also got some questions to ask about what's happening in the markets at the moment. And then Matt's going to take us through a bit of a survey to get our vibe on where we think 2020 will lead. So let's get stuck in, Matt. How you been?
Yeah, good. It's been busy, hasn't it?
Yes.
Doesn't seem like a holiday.
Yeah, well, Stake now, about to launch in London or England?
Yeah, the UK. So that, a couple of weeks away. It's pretty exciting.
That is exciting. So let's start talking what stocks have been hot. And I think it's pretty obvious that Tesla has been one of them, Matt.
I think every stock's been hot.
Well, that's true.
I think we were saying before you could buy peanuts and would have made probably money in the market.
No, the market has been on an absolute tear lately.
Yeah, no, Tesla's a massive outperform, really. I think we spoke about it last time, and we were like, we don't know what's going to happen. And then it just broke through around sort of the 280 range and literally hasn't stopped. So that's been ridiculously hot. I think in the last couple of months, overnight now with reporting, it's up over 100%, which is insane.
Ridiculous.
Yeah, it's insane.
And we've got a breakdown here of age groups. So everyone from 18 through to 65 plus through Stake. The number one stock is Tesla. Rightly so. I think to your point, we spoke last time about the short sellers, and with the stock hitting near $650, they're absolutely going to be
covering their shorts.
They're definitely not hot right now. No, Tesla, it's been honestly amazing. We ran some data for a journalist maybe a week and a half ago now, and we saw that like the amount of money that had been invested and where their portfolios are at, it's around 15% of our customer base owned Tesla, and half of those people had bought it below $250, which is pretty amazing. And the amount of money made in it was close to $20 million US, and that's before tonight's report. So if you see some more Teslas on the road, they're probably a Stake customer. So, it's been pretty exceptional. I haven't seen something like this for a while.
Yeah, I'd be interested to know, like, you've got a bit of a technical analysis background, and you mentioned there when it broke through at 280, so sort of a technical term. I'm assuming it would be popping up on your screens at the moment, all-time highs, etc. How do you sort of think about it now, given the growth that it's had? Last time we spoke, you were sort of, I'm a steer clear.
Not in the sell way, just
not in the sell way, just
uncertain. Yeah, nothing was lining up. It was going sideways at the time, and it broke through, as I said, at that 280 mark. And I actually told my dad to buy it.
He's done well.
Yeah, he's done well, but he takes the kudos for that, not me. So it broke through a level, and I think we've spoken about it before. When you buy a share, if you invest with this strategy in mind, you want to buy stocks that actually haven't reached a level before, because there's been no known sellers at that price before. And once it went, it just, as we've seen, it's just shot up. I don't know if it's been a scramble. The report came out. It seems to obviously outperformed again to its report. It's just truly, I'd be very nervous being a short seller, but maybe there are people adding more. Who knows? But it looks like a short squeeze, but I don't know enough to comment any further.
So I'm interested in your strategy. There hasn't been any known sellers for a long time now. It's been a lot of clear air.
Yeah.
When do you start thinking about it's run too far, or is that not a factor and it's just have a good stop loss and hope it keeps running?
Yeah, I think that's the case. I mean, ultimately, everyone's got a different strategy. Some people are believers that this is going to change the world, and they're not even buying it for technical reasons. They're just massive believers in Tesla, Musk, what it's achieving, and that's fine for them. In terms of my strategy, would just be, well, it keeps going up, so hold it until it doesn't. The problem with these things is if it moves that quickly, it can start to get exponential, like we saw with Bitcoin a few years ago. And I just, I hope for state customers it's not that situation, but just always got to be aware of it.
And so then for the state customers, that making sure they're covering their downside, how do you think about setting a short in a case where it's just run unbelievably?
You just got to be disciplined. Ultimately, you've got to have your level and say, the stocks, it depends on your own strategy. And you may say, I want to give back 5% of my position or 10%. I want to have a level that, if it goes back through $600, I'm out. I think it's trading, $650 now. So that's around 10%. That may be something people do. Everyone's got different risk appetite, but as long as you have a plan and stick to it, you won't get burnt.
Yes. That's the main thing. Have a plan and don't get burnt.
That's right.
Well, the biggest bulls out there for Tesla, I was reading on Twitter, hoo-haing on that it's eventually going to be the world's most valuable company. Now, I'm looking at their market cap now, and it's $104 billion. So for it to be the world's most valuable company, it's got a long way to go.
Close to, if not the most valuable car company, though.
Second most valuable, yeah.
Yeah, more than Ford and GM combined.
Yeah.
Ford, GM, and Chrysler is $80 billion, and Tesla's over $100 billion, obviously, which is, like, you think about what's Tesla, maybe a 10, 12-year-old company?
Yeah.
What are these?
2003 it started, 2008 Musk took over.
Wow, it's amazing.
Yeah.
There you go. But for it to be the world's most valuable, it's got to hit, almost $1.5–2 trillion.
Well,
so
my prediction
could be 100 times more.
I made a bold prediction that a company would hit $2 trillion by the end of the year. Maybe it's Tesla.
Yeah. Jump on board if that's the case. Yeah. Nice. Well, the second most purchased stock on stake for the last couple of months over Christmas period was Apple.
Yeah, one that people keep having questions about, but it just keeps going.
Well, again, beat market expectations in results overnight or a couple of nights ago. So this, for me, is a company, though, that if the economy goes the way we kind of think it will, might suffer a little, but and with China now in a coronavirus, all things are possible.
No, people have to spend more time inside. That means more time looking at their phones. That means more money spent on the App Store. Maybe it's good.
Interesting.
Wow. Yeah. Apple's exceptional as well. I mean, as I said, the market's just incredibly hot right now. And as I said, I think a lot of these stocks are just naturally moving up because the market's moving up. But I mean, Apple had, I think it's got like over $300 billion worth of cash, just literally of cash. So it's pretty amazing what it's achieved. And it reported yesterday, didn't it?
Yeah.
Yeah. So, it's obviously they're delivering. All people's expectations are being met, which is good on them.
So you speak, the market is hot. How are you personally thinking about the 2020 sort of sentiment at the moment? I think every time we speak, it's like a cautious approach.
Yeah, I'm more cautious than I was last time now. Look, I was bullish. I think we spoke at the event that you guys hosted, and I was bullish for 2020. It just played out very early in the year, or it seems to have. I don't really know. I mean, you just got to be aware. Things can change pretty quick, but right now, obviously, the strength of the market is up. You want to be long,
yes,
until you're wrong, really. So just when things are when everything's moving up in a correlated way, like I generally get a little bit nervous, but that's just my nature to be a little bit skeptical. So I'll stay skeptical.
The question is, when do you pull the trigger on SQQQ, which is the triple leveraged short for anyone that is...
when you get long the inverse of that. When you're going long, what is it? The
TQQQ.
Yeah, when you're long that, I'll take the other side.
I'm long that.
All right, tonight.
So Apple, and then no surprise. Well, actually, surprisingly, AMD comes in at third, Ren.
Yeah, often spoke about, but not in the same sort of sphere as the big tech companies. AMD, Advanced Micro Devices, is a semiconductor company. Gets a lot of buzz online. What are you thinking about this one, Matt?
Well, AMD had a massive run during the Bitcoin mining, the cryptocurrency craze, because it was obviously providing processors for that. So that was, it was just a really hot stock at the time. So it made a big run. It made another run now, but I think it reported below expectations. So it actually had a pullback in the last few days. Look, you just got to have to wait and see the next few days what it's done. It's obviously also quite close to its all-time highs, but I could say that at probably about 1,000 stocks in a year. So it doesn't really give you much insight. But, with that report being a little bit negative and the market, in AMD at least turning the other way, it's probably just a close watch rather than a let's jump in and play sort of thing.
So one other company that is in the top 10s for a lot of the age brackets, especially a lot of the younger age brackets, is the Chinese automaker NIO.
Mhm.
Is this just a, Tesla's doing well, so other electric car makers are going to do well as well?
Yeah, it's a pretty common theme. This is known as the Chinese Tesla. So, obviously it's a common strategy that you just go where the money's flowing. And if people buy Tesla, they're probably going to be trading NIO in this instance. So I don't know anything about the underlying company, but the share price is moving up. It's following Tesla. It's pretty smart trade if you can get on it. Well, if you were on it.
When we talk about your strategy and, buying stocks that are going in the right direction and you see a sort of first mover in this space, so something like Tesla, do you start looking at other electric car companies and saying these are, going to be high on my watch list because I expect a sort of a tailwind to take them as well?
100%. As I said, I wasn't on Tesla. I was keeping a close eye, and I put my future. I betted my future.
That's keeping a close eye. Dad, you buy it. I'll see how it goes.
I've got to divide the inheritance 3 ways, so I've got a bit of a stake in there. Yeah, no, that's exactly right. And I think that's a common theme. When weed stocks run, they run together. You see that with the lithium stuff that happened in Australia a few years back. They just move together. The market is. People's expectation is not of that company; it's of the space.
Afterpay, Zip.
Yeah, they track each other. It's stock standard strategy for people to be like, well, this one hasn't. It's a lagger. It may not be the best business in the space, but everything else is moving. I'm just going to jump on because it's an easy play, and that's a very common theme for investors and short-term traders.
Do you know anything about NIO, Ren?
I can't say I do. Maybe we should. Maybe we're missing out.
Never heard of it. I haven't.
Chinese electric car manufacturer.
Yeah, right.
Yeah. But you got to remember, NIO is well below its 1-year high. It's just really started pulling up since Tesla started running.
Right.
It just looks like a classic follow trade.
Right.
Yeah, like NIO's, it looks like it's well off its highest. Like it made maybe a year ago it was around like $10 and now it's trading at $4.27.
Right.
So I wouldn't get overly excited yet, but if you bought it in the ones, you're pretty happy.
Mm-hmm.
Yeah, I think there's a lot of sustainability trades that will come out of China in the near future as they get very serious and become market leaders in solar panels, electricity generation, electric cars, a lot of that stuff.
No surprises that Microsoft comes in at number 4 for the most traded on stake over the last couple of months. I guess across all age groups there from 18 through to 65. They've been buying, I guess, big blue chip tech company along the same lines of Apple and co, but again, been running quite well.
Microsoft's one of the funny ones. It's like one of the early tech darlings and it's sort of a little bit unsexy now, but you saw Adobe make a massive move in the last few years when it moved to subscription. It's been on, the market's up 10 years in a row now. If you've put money in the US market, you've crushed it pretty much.
I was just thinking about that. I'm interested, and I don't know if it's the way that data is pulled, but I'm interested to know why ETFs don't appear in these most traded. Are you seeing customers buying more individual stocks in the US? Like if, the S&P 500, there's a multiple indexes out there, is not a lot of money pouring into that. It's more individual stuff.
I think there's 2 aspects. If you're going to buy an ETF as a passive investment, you don't necessarily need to go to the US to do it.
Very cool.
Ultimately you can get the same exposure in Australia. That's totally fine. I think the ETFs for people outside the US are sort of the exotic ones that you can't access.
Yeah.
And that's a smaller audience.
Yeah.
Whereas everyone goes, Microsoft's reporting, I want to get involved. I think it's underpriced. I've been following it for a while. Whereas if you want to go buy the Spiders ETF, which is the tracks the S&P 500, you can pretty much get that exposure in Australia. And, you wouldn't have to go. 77% of our customers have got Aussie brokerage accounts. They don't need to use stake to get that exposure. It's more about getting access to things you can't access.
Yeah. That's fair call.
On that note, in terms of exotic ETFs, one that featured in the 18 to 24-year-olds most bought list was ticker code DGAZ, which is a 3 times inverse natural gas exchange traded note.
Jeez,
so maybe let's start with the basics, and can you explain to us what that is, and then let's have a chat about that bold 18-year-old.
I feel like this should start with a disclaimer. I'm not going to be able to pronounce all of that. No, so, these are exotic ETFs. They're not for everyone. So these, and especially when it's 3 times inverse, it's already like doubly exotic. So what this does is as the price of natural gas goes up, this ETN actually goes down, but 3 times as aggressively on a daily basis. So if on one day the natural gas price goes down 1%, this ETN will go up 3%. If the natural gas price goes up 1%, on the next day, the ETF will fall 3%. So someone's obviously, there's a few people that are...
what's with gas?
It's been a pretty big move, though. It ran through 200 and it quickly ran to 270. So, wow.
Someone nailed
good on
it.
them. Yeah. That's the most amazing thing for me. And obviously, I'm a bit of a US stock market file. It's just like Disneyland. You can just get access to these sort of things. You just can't anywhere else. And
is that what you tell your kids? The share market's like Disneyland?
My son sits in front of me and he goes, "Can I do some charts?" And I just go, "Do I know if it starts bottom left and ends top right?" Like, it's not bad. Very simple stuff. You could probably be better at me than at it. Yeah, no, that's what it's about. Is as I said, it's being able to access. You can't access this anywhere else in the world. You can't get that sort of exposure. Like to get a margin account to get 3 times leverage, it's just painful. Whereas you go to the US market, you open a brokerage account, bang, you can be trading gold, silver. Nickel's been running. JJN is one of the ETFs. This DGAS to get exposed to natural gas. You want to trade wheat or corn, it's all there. It's you can basically be your own hedge fund in the US market, and that's what's so amazing about it. It is pretty much the world's market.
Playground.
So this DGAS ETN is up 50% in a month. So that means the price of natural gas has fallen rough 16%.
It's a little bit more complicated than that because it resets every day, and this may be based on a different index, but ultimately the price of natural gas has obviously fallen
down.
Yeah.
There you go. Well done to that lucky 18-year-old.
Or 24-year-old.
Yes, true.
Like that is
1927.
Or Santos that has signed up for an individual account, hasn't it?
Or there's probably a few of them. Maybe a whole people have just left university and just
True.
started in the market over the holidays. Who knows what they do, right?
So that kind of closes out what's been hot and what's not. Any others in there?
All the other hot ones are everything you would expect. Amazon, Alphabet, which is Google, Beyond Meat has made an appearance again.
It's on its way back. It looks like,
Disney jumps in there, all the stock standard big performers over the last few years.
Yeah, and a few that have made spikes, like Aurora Cannabis, like weed peeked its face out for a bit of a while and started to move back up after a pretty rough last year.
Yeah,
Facebook, Uber, surprisingly. As I said, the market's been pretty radical, so people have been in and out of a few things.
Yeah, so I think we can summarize it, though, that stake users love emerging tech.
Looks like they're loving everything right now.
So outside the US market and some of the big gains we've seen there to start the year, there's some other things that are going on in the world that make us ask sort of what's the story there. So we're going to have a chat about them and see if Matt can tell us what the story is.
What's the story?
What's
this is
the
a new
story?
segment we're introducing called What's the Story, where we ask a question and there may not be an answer.
No. And then if there's not an answer, Bryce will come up with a story.
I'll plead the fifth.
So what's the story with gold, Matt?
Amazing. Yeah, just, normally when you see market highs, gold's dripping off, but this has been the case for a long time now. Gold's is really, really strong. I don't know, honestly. It could be the interest rates. It could be expectation that things are going to get hairy, the presidential election. I'll be speculating the reason. I've honestly got no idea.
Coronavirus?
I think it's well before that, unless gold knew that it was going to happen.
But, Iran leading into coronavirus. Leading into Trump impeachment.
So what you're saying is you don't think it's acting like it traditionally has?
No, I think people assume that when stuff goes south, gold goes north.
Yeah.
But it just hasn't been the case for the correlation. That's just broken down. So gold's been an amazing investment for people. And as I said, you can trade it 3 times. I know a couple of people that have been really happy with their returns. But I think you said you got some gold.
Yeah.
Yep.
We're both in gold.
Yeah. One of our live shows, I don't think it was the one you were at. I think it was the one in Melbourne. The panel were all like, no, wouldn't be in gold.
Yeah.
Well, shows them.
Rookies.
I think people, they look at it probably as a physical commodity, but ultimately it's just a price of an asset, like a company. And if the price is moving the direction you want, then it's doing what you need to do. Ultimately, you're there to invest in it to make money. And if the price goes from 1 to 2, you've made money. So it doesn't really matter what the ticker is, what the name of it is. If it goes up, well done to you.
Honestly, these days, it doesn't matter what the ticker is. Everything goes up.
Absolutely.
Not everything goes up, because what you're about to ask what the story is something that hasn't gone up.
Interest rates.
True.
One of the advantages I like having my money sitting in stake is that I've got US dollars exposure. So Matt, what's the story with the Aussie dollar?
Oof.
down.
You need to ask an academic or an economist. I don't know. It's just it went up to in the early 70s a few, and they just got hammered. Yeah, it's just been on a drip pretty much since it was at 105, maybe 7 years ago. When I go back from the States, thankfully.
I often think about that time. If we had just loaded up, if steak had been around then, and we just put it all in.
Yeah, no, it was at, I remember reading it was going to 150, when it was at 105. It's like that. It's the end then. Yeah. So when someone says it's going to 40, it's probably going back the other way. So I don't know. It's all
right, well, let's get it out. It's going to 40. It's going to 40. It's going to 40.
So this is a situation where being unhedged would be advantageous for a portfolio, and that means that you are exposed to currency fluctuations. But in a time like this where the Aussie dollar keeps weakening against the US dollar, if you're exposed to companies that make profit in the US or stocks themselves are in US dollars, then the value of your asset or return is likely to increase just by nature of the weakness of the Australian dollar. So something to consider when you are, I guess, buying stocks or have the option to hedge and not hedge, if you can come up with a thesis as to what you think the dollar is likely to do. And of course, we've spoken about the interplay between interest rates and broader economy with that sort of stuff. And this is a good opportunity to, I guess, take advantage of that. So that's why I said, even just sitting cash in your stake account doesn't even have to be invested. It's in US dollars. I don't think Matt would appreciate people just sitting cash in the account. He wanted invested, but
honestly, I hold USD. I've always held it as just a bit of a hedge anyway.
Yeah,
you want to hold a currency, whether it's pound, if you go work, you go travel overseas, like people, you can get a Aussie dollar, bank that will allow you to hold multi currencies. You just got to make sure you're, why you're doing it.
Yeah, absolutely.
Just get one of those CommBank travel cards and just load up.
And pay a ridiculous FX fee to get it in and out.
Any other what's the stories from you, Ren?
Not off the top of my head. We'll have to prepare some more for Matt next time.
Yeah, nice. So I'm really excited to bring that format back. So we'll close out, Matt. We've done some bold predictions at the start of the year. We've had a couple of guests also share some of theirs. And you mentioned that you sent out a bit of a survey to your stake listeners to get their vibe on a few different things and I guess what they're thinking about 2020. So what we thought we'd do would be for you to read us some of the questions that you've sent out, and then we might have a chat about them, get your opinion, and maybe make a few bets.
Maybe.
Absolutely. So, we ran a survey in December, right when the year closed out. Number of things, what's going to happen next year? What stocks would you buy, sell, short? What's going to happen in certain situations? So, I'll ping them at you and we can check them. I'll start from the top. How do you think the S&P 500 will perform next year? And the options were relatively flat, up but less than 10%, down but less than 10%, a crash is coming, or up 10% plus.
I couldn't remember all of those answers, but I'm saying down on from where we are now, and more than 10%. More than 10%.
More than 10%?
Yeah. Wow.
I'll say 31 December 2020 will be down, but not more than 10%.
Cool. Well, that was actually the least popular answer.
Which one?
Down less than 10%. More people thought a crash was coming.
Pessimists, a lot of them.
but the most people thought that 37.5% thought it'll be up, but less than 10%. So it's
interesting.
It's.
What was your answer?
I thought it'd be relatively flat.
Okay.
Yeah.
Yeah.
So, but I'm wrong so far.
Yeah. Well, we all are.
Yeah. I mean, it could be up 30% in the first 6 months, down 30%, and and relatively flat.
Yeah, that would be quite a ride. With that in mind, the next question was, what poses the biggest risk to markets in 2020? And we had a number of options. You guys can throw yours if you want, and I can tell you
coronavirus.
That's knowing the answer. No, so some of the options were Brexit chaos, negative interest rates, tariffs, the tariff war between China and the US, irrational exuberance, or people's own investing, i.e. would their own investing disturb their returns more than the market?
Oh, that's not bad. Of those answers, it would have to be irrational exuberance for me. I think Brexit will probably have a positive impact psychologically. And in terms of tariffs, well, they're already priced in, I think. And can't remember what the other response was, but irrational exuberance, given the fact that we're getting downgrades if a revenue, outlook in terms of company forecasts aren't great, but share prices are going nuts. So it doesn't really make a lot of sense.
I'm going to say the Fed. I know it wasn't on there, but that's the only thing that seems to stop this market when they raise interest rates or when they stop doing QE.
Not bad.
That was 2018. Otherwise, it was full steam ahead.
Yeah. Well, 27.5% thought irrational exuberance, which I think is sort of playing out early in the year. 24.5% thought tariffs were negative rates, and then their own investing was the. But I look at the Fed and irrational exuberance as one and the same thing.
Yeah.
I think they're probably helping that along.
I just feel like tariffs are going to be a non-story this year because Trump wants the political win of his deal in inverted commas.
Yeah.
I don't see it being a big impediment this year. No. I don't see a big escalation coming this year.
No, it's election year, so
exactly.
It's got to be resolved.
Yeah.
Cool.
And the next question, will the US market outperform the Aussie market?
Yes.
Interesting. So you think the US market will fall more than 10%, but you also think it will outperform the Aussie?
This could be completely contradictory compared to my bold predictions.
Are you going to 100% gold?
No. Will it outperform? Yes, is my answer.
You seem very tortured there.
Yeah, I think economically we'll perform worse than the US. I think that'll have flow-on effects.
I think if people haven't listened to our episode with Andrew Brown, they should listen to that, because after that you can't help but be pessimistic about Australia. So I'm going to say yes as well.
69.5% thought yes, 16% thought even Stevens, and the rest thought that it wouldn't outperform. The way I see it is it depends on the overall market. I think actually if you see a correction, you'll probably see Australia outperform just because of the weightings of the big stocks.
Yeah.
And they haven't really had the same run. Like the banks have got and the miners got such a big weighting in Australia, they're not going to be as impacted by a global shakeout. Whereas the tech stocks have been rallying, as I said, for so long, there's a lot of air underneath them if they fall out. Yeah. So it all really depends on how the market goes. If we're flat, this outcome makes sense. All right. Now, this one's actually run its race, I think. This is the Tesla battle. Who's going to win between Elon and the shorts?
Well, in Elon's mind, he's always winning. But I mean, at this stage, it's very clear that the longs have won, but there's still a lot of shorts out there.
I'm going to back the underdog. I love an underdog story. Tesla to 0 by 31 December.
You're nearly taking, you're going against the team that's up by 8 goals with 3 minutes remaining in the grand final.
I'm always the optimist.
77% thought that Elon would be right, and they've obviously been correct so far, but they've got 11 months left, so who knows?
I feel like even if Tesla falls from where it is, which isn't unlikely, it's so established now. It has consistent sales. It's going to have gigafactories across 3 continents. It might not be profitable, but being a fraud, going to 0, all that stuff seems out of the question at this point.
Yeah, as I said, I just don't know. I know what the share price is doing. Talking about the election before the race to the Oval Office, so we assumed in our question that Bloomberg or some other Democrat, which would be the case, will go up against Trump. Who's going to win it?
I think Trump will be re-elected.
So do I, yeah.
Unfortunately.
I'm surprised you said Bloomberg. Is that what you hope?
He just no. That's what when the survey went out in December.
He was buzzing at the time.
Yeah, and look, I think he's putting $1 billion behind the camera.
Yeah, something like that. Well, he's got 50 to spare. So
billions is like pocket change.
Yeah.
53% of our users thought Bloomberg or another Democrat would actually win.
Well, fingers crossed that's the case. And this is not a political show.
Although if Donald Trump wants to come on and defend himself, more than welcome.
And the last 2 questions, large cap or small cap investors will be happier at the end of the year?
Small.
Large.
Really?
Yeah.
Put a beer on it?
Done.
Well,
I think one of my 2020s was that large caps will outperform small.
Potentially. There you go.
Yeah, I just think gut feel. What do you think, Matt?
As I said, it all depends on the market. If we look,
this is with a pessimistic view for me, which is why I said it.
How can you say that large caps will outperform small, but also that the market will fall more than 10%.
Well, that's
Because
actually, small caps have got a bigger, like with the market goes, they'll go quicker.
Yeah.
This is
Okay.
not the liquidity in them. The large caps will hold because it's like a bit of a flight to safety.
Yeah.
Yeah, okay.
It depends on how large it's become.
You can see
You know?
Google hanging on more than Afterpay.
True.
Different markets, but that's the kind
it's
of way.
more
Yeah,
entrenched. It's got more cash behind it. It's more structured. It's just, people will go, okay, I've got to invest somewhere. Am I going to invest in a large cap or a small cap? It all depends on the market dynamics. So, I don't really have an opinion, to be honest, but that was very close as well. Our users had 53% saying large cap, 47% saying small.
Nice.
And the last one is actually, there's two more. Sorry, totally unrelated to the market. Is who's going to win the Battle of LA, the Clippers or the Lakers?
Lakers.
What's the Bell of LA?
The basketball.
Oh, the game.
The sport
Two
where they
LA
bounce a ball and throw it in a hoop.
Basketball. Clippers or the Lakers?
Yeah.
Lakers.
Yeah,
With
you just
spirit
look like
behind them.
you look like you're answering. You don't even know who the Clippers are.
Couldn't picture their jersey.
Yeah. It's white and red. They're the second team in LA. Yeah, our fans, or the Lakers fans, are going to be happy according to our investors. So the last question is the ETF bubble.
Oh, yeah.
Who's going to win this one? The ETF diehards or Dr. Michael Burry?
It's got to be the ETF diehards, but I'm sure we'll see something in the ETF sphere that we haven't seen before. I'm not saying this year, but something's got to happen.
That's a tough one.
Yeah.
I think they're both right. I think ETFs are here to stay, but Michael Burry was also right that there's no price discovery mechanism if you're just buying the index. So is that
Which has danger.
Is that a weak answer if I say there's a
Yes.
little bit to both?
That's sitting on the fence if ever I've seen it.
I don't think the ETF bubble will pop. Like ETFs may fall in price because the market falls.
Yeah.
But I don't see like massive outflows going back to individual stock picking or going back to active management or people just allocating more to their super or something because they don't want to invest in ETFs. I think they're an entrenched and structural part of the market now.
Yeah, no, so our users had 70% or 68% supporting the ETFs and 32% going the other way. But next time I come on, remind me to tell you about what the ETFs do in the Japanese market. I don't want to give too much away, but it actually doesn't even create chaos in the ETF. It creates chaos in the futures market because they have to hedge to create the position. And it's absolutely fascinating.
Great cliffhanger to leave the episode on. Well, I guess without further ado, then we'll leave it there, Matt. Thanks for coming on for the first episode of 2020. Much appreciate your time and looking forward to seeing how this all pans out. It could be a very interesting year for what's hot, what's not over in the States. Maybe Tesla will be at $1,200 the next time we speak. Maybe it'll be $200. Who knows? Wild ride ahead. But thanks for your time. We'll catch up in a month or two.
No, cheers. Thanks again.
Thanks for listening to Equity Mates Investing Podcast, a production of Equity Mates Media. Please remember that everything you hear in Equity Mates Investing Podcast is general advice only. The content has been prepared without knowing your personal objectives, specific financial circumstances, or goals. The host of Equity Mates Investing Podcast may maintain positions in the companies discussed. Before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.